Why Combinator now plans to invest $500,000, with some conditions attached, to join it. After a record-breaking year for venture funding, the renowned startup accelerator Y Combinator is starting to sweeten the deal for founders, to try to keep them interested in joining its program. YC announced earlier this week what it's calling a new standard deal that it says will apply to all startups accepted into its program, upping its total investment to $500,000. It will take a 7% stake for $125,000, just as it's been doing, but will also invest an additional $375,000, and is taking most favored nation terms on that money, meaning it will get the best terms offered to future backers for its investment. How many shares it will get for the $375,000 will be determined when the startup accepts an investment offer from another VC. But the new standard deal comes with some strings attached that could be unsavory to other seed stage VCs, and that may prevent them from investing in a YC-backed company before the accelerator's demo day, as many like to do, or even from investing at all. Some seed VCs say the new framework could make YC startups too expensive for other seed stage VCs who otherwise would be interested, said David Chen, a seed investor at DCM, because founders will be incentivized to raise subsequent rounds after YC at higher valuations given the dilution they've already given up to YC. It could also place constraints on YC founders who want more say on how much of their startups they want to give up and to whom, said another seed investor, Nora Cadena. It decreases a founder's capacity to choose and fill in a round with all their newfound YC knowledge in a way that is aligned with their values, vision, and most importantly, needs for the round. Cadena told Insider. Related global VC investing almost doubled to $643 billion, over $500 billion in 2021. Here's where all the money went. Should the startup leave the program with a horde of excited investors who offer the startup a high valuation, the extra shares granted to YC may not make much of difference, some VCs say. But if the valuation isn't high, YC still gets its extra shares and owns a bigger chunk of the company then, perhaps, the founders or other investors would like. YC also takes pro rata rights of 4%. It says, pro rata means in every subsequent round, YC gets to buy more shares, should it wish, to maintain at least a 4% stake in the company. Global venture investment into seed stage startups has skyrocketed recently to $29.4 billion in 2021, a 56% increase from 2020, with more than 17,000 startups raising funding at the seed stage last year. Crunchbase reports. Related startup founders, VCs, and lawyers open up about the dark world of dirty term sheets, where shrewd investors screw them over. A market this competitive means that even a startup factory as well known as YC has to increase its check size to be attractive to buzziest startups, especially after concerns that its rapidly growing class size could be making the program less beneficial for founders than it once was. A representative for Y Combinator could not be reached for comment.